Did you know that a Google search consumes as much power as powering a 100-watt light bulb for like 6 seconds? A Chat GPT session is 50 to 100 times more power consumption. So you think about power consumption and how important it's going to play a role in AI, in all the data centers, and all the chips, and all the building of what's going on.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California. I'm going to get this on one take from my cell phone directly. We got a lot to talk about. I don't know why my desktop won't upload videos anymore on LinkedIn. So I hope the audio is okay. I'm going to try and get it figured out. Big jobs report last week, and it is a little softer than most expected. And what's interesting is to watch the 2-year Treasury and 10-year Treasury react. The yields react to that. And so did we hit a lower high? So we got as close to 5% back in the fall on the 10-year yield, technically 4.99. It just got to about 4.71. And so you've got these kind of like waves where you've got these yields going up and down. But if the trend is, this was the high and then a lower high, the trend is your friend. Remember, inflation is falling. And so, so let's talk about how that all gets impacted. Before I do that, I just want to say it is Monday evening. It's 10 o'clock on the West Coast. This is my last video that I'll be putting out before the Mortgage Innovator Conference. If you were anywhere around Southern California, at 1 o'clock on Wednesday, come to the Hilton in Anaheim. Check out the Mortgage Innovator Conference. Myself and Paul Gelati, we're the co-chair of this conference, sponsored by the California Mortgage Banker Association, which is a fantastically run organization that is here to serve. So this is a tech conference put on by servant leaders. And so we are giving back, and this is a great lineup. So check out the agenda. Come on by. Full day on Thursday. And then, of course, you know, we have closing comments on Friday morning. If you can't stick around, no problem. But if you're there, it'll be fun. So we've got party on the rooftop deck there. It's a great venue. Plus, it's around Disney if you want to come hang out and make a time of it. That's this week. All right. So let's talk about 240,000 jobs were expected last Friday for the April jobs report, which is put out the first Friday of May, and the number came in at 175,000. And what was really, so that was a miss, okay? So remember, when there's weakening economic growth or weakening data, that's typically bond-friendly, mortgage interest rate friendly, all right? So it's kind of like bad news is good news. Sucks, but it is what it is, all right? But it's not just a headline number, and I'm going to dig into that headline number a little bit, but it's the fact the wage inflation, which is expected to be 0.3% in that month of April, was only 0.2%. So the year-over-year change of wage growth, wage inflation went down from 4.1% the prior month for a yearly read to 3.9%. Wage inflation is one of the gauges that the Fed is looking at to see that inflation is trending down towards their 2% target. Not all the way to their 2% target, trending to their 2%. Remember, since 1980, core PCE is 2.4%. Next week, on the 15th, we have a CPI reading, which will be April CPI, the Consumer Price Index. And between now and the next Fed meeting, which is June 12th, there are 2 big CPI readings and 2 big jobs reports. So we had that one last week, and we have another one. So lots of data to come out on both the job and inflation front. So it's not, we have to be at 2%. We can be trending towards it. And so January, we had some higher inflation. Maybe it's just kind of some wonky stuff there in reporting. February, same thing. Okay, maybe it's a little, March inflation, we have a little trend there. And the Fed acknowledged as much. And they said, you know what? We seem to have stalled out on our progress, but we are confident we will continue to go towards 2%. And if you strip out, you know, I mean, they even said like owner's equivalent rent is a lagging indicator. We know that the new leases are down and new prices are down. That's a 12-month index. House appreciation, which is high and a big part of the CPI, is trending up, which is great for homeowners. And that's a supply chain issue. We don't have enough housing supply. But the PCE, the personal consumption expenditure, does not have as high a shelter percentage as a CPI. So we'll continue to look at those things. But job growth, if the labor market is softening, okay, and this is a continued trend of softening labor, the focus won't be only on inflation and it has to get to 2% or nothing. It will be that, hey, people are losing jobs. And we know that's very deflationary, or certainly disinflationary. Less money circulating in the economy is not good for inflation. And so people losing jobs. There are, I believe, 1.84 million job openings. Excuse me, I apologize. The JOLTS report had 8.4 million job openings in the month of March. That's down 400,000 job openings in 1 month from 8.8. Remember, that number was around 11 million. We had 2 job openings for every unemployed person out there for a while. I think we're down to like 1.3 or something like that. The unemployment rate ticked up last week to 3.9%. So we know that on the Fed dot plot, where they said they were going to do 3 rate cuts in the year 2024, they expected towards the end of the year the unemployment rate to be 4.1%. Well, we just ticked up to 3.9 in 1 month. And if you look at MBS Highway, which God bless Barry Habib and his fight, I have to say he's looking younger. He's looking like Dan and Jake every day. And so Barry has always been the better looking. So Dan, you and Jake need to step it up. But Barry, you know we love you. We're praying for you, and we know you're pulling through. Man, I love seeing you on the videos every day. They broke down that jobs report, and they showed a massive, like 360,000 birth-death rate modeling increase. So like they added 363-something thousand people to offset that report, that survey, to end up at the 175,000 number. It's really crazy what's going on. But we know labor is softening, wage inflation is softening, job openings are softening, and we also have some services data that's softening. Remember, all the inflation, okay, has been services, non-housing service-related costs. That's what Chair Powell even mentioned in his video last week. So we know that services has been higher, you know, going out to eat, going on vacations and airfare and all that kind of stuff. Well, the ISM servicing number came down into contractionary territory as of last Friday. It was a big, big miss, a massive miss. Under 50 on the index. I think the number was 49.4, was expected to be 52. And then the jobs in leisure and hospitality, the increase out of that 175,000 jobs that were created in the month of April on the Friday report, only 5,000 were in leisure and hospitality. So what's up? Do we have services inflation still, or is it slowing? You have slowing jobs and slowing inflation. We'll end up seeing, all right, we got time here, which is kind of the overarching theme of that Fed meeting last week, is we need more time for these sufficiently restrictive rates to do their work. And they are, and they will, and they always do. We saw a couple more regional banks fail. Just a $6 billion bank failing, no big deal. Yes, it was an orderly wind down because, you know, all of our federal regulators stepped in, and thank God they did, secured everybody's deposits. That's another $6 billion bank that, you know, failed. Earnings are working. 80% of companies have reported here for Q1 earnings, and they're winning. I mean, 80% of the 80% are beating their earnings report by 7% and their top line revenue by 4%. So their earnings power is there, although a lower bar than a year ago. But they're getting higher earnings, 7%, on less revenue, 4%. So that's something to watch, softening earnings reports. So we'll see if the sell and man go away ends up being a real thing. Japan stepped in, did some yield curve control to try and defend the yen, which is weakening towards the dollar. And by the way, the U.S., our GDP was under 2%, you know, in Q1, mostly because we imported, but we're one of the least importing nations of the G7 nations. I think we lead the G7 with only 27% of our GDP is from importing. China's 38, Japan 47, UK 70, France 93. Germany's almost 100% importing all their stuff. They're just not self-sufficient. Okay, I had some great comments and talk about the balance sheet runoff really, really quick. Okay, so we have huge treasury auctions this week. 125 billion, 3s, 10s, and 30-year bonds are being auctioned off this week. That's a market mover potentially this week, and then we have to wait till next week's CPI. The Fed has said starting in June that they are going to make sure that they reduce the amount of treasuries that are running off. That means tapering. Okay, that means they are less tightening. Okay, so the inter-Fed rate cut, but less tightening. So they are allowing bonds to mature, and then now they're going to let less of it run off and then buy more to replace it. That's a big deal. We'll talk about it some more. Cheers.
Hey, it's KP coming to you live from Anaheim Hilton, the Mortgage Innovator Conference. We are wrapping it up. We've got our rooftop deck party tonight. It was a great event, very well attended, a lot of momentum going into next year. Eat, sleep, innovate, repeat. Sounds like something my boy Josh Pitts would have wrote. Hey, this is our rooftop deck. We got a sunset deck here. Great event. We had some people leave, catch some travel home, but we still got a couple open bars. I mean, it's a great event. Hopefully you guys can see how well attended it is. All right, so let me get out of the noise so you guys can actually get some data and some update. It was kind of a light news week. There were some very important things, but the most important thing is, at least as it relates to the mortgage and real estate business, other than all the innovation that we've been dealing with here, is that the 10-year Treasury has come down almost 30 basis points in just under a week. And so that's a big deal. Why is it a big deal? Because lower rates means housing affordability is better. More people can get into homes that are otherwise locked out with higher rates. Business goes up, and we need that. And it also helps a couple more people get off the shelf if they are an existing homeowner and have not sold. By the way, this is the other deck. This is the Lanai deck. This is where the party was the last couple years, and they moved us over to the sunset deck. It's a little colder over here. We had a power outage last night at this hotel. So next year we'll be at the Waterfront Hotel in Huntington Beach. So I'll get some more content out about that. But yeah, the Waterfront Hotel on Huntington Beach, on the ocean, sand, right at Huntington Pier next year. And we already have some commitments from some of our really big sponsors that want to make it even bigger and better next year. And it will be. The attendance here was fantastic. It was bigger than last year. And I know that's kind of weird to say with our market being what it was, but the California MBA just does such a great job. So thank you, Susan and Sarah and Donnie and Marie and Nick Foster, and of course, my co-chair, co-host, Paul Gelati. Okay. Sentiment data. Okay. So hiring sentiment data, this is like a survey that goes out and it surveys business owners. It's falling like a rock. And that's not good for jobs. And we know that last week, the Bureau of Labor Statistics, the first Friday of May, they put out their April jobs report. And it not only was less jobs created, one of the lowest numbers in many, many months, but wage inflation went down. I'm not celebrating that because that's not a good thing. The economy could be slowing with labor softening. But is there a soft landing by the Fed? I don't know. Let's get into one more thing. PMI, global services data. Okay, so the services data from the PMI show that hiring is also slowing. So that's three big data points back to back to back that are showing labor is softening. Today, the weekly jobless claims was the highest number it's been since August. Okay, again, not celebrating it, pointing it out, because when labor softens, there is a higher chance of the Fed getting closer to cutting a rate because they have a mandate to make sure we have maximum full employment. And so that's something they'll be looking at. Next week, the other part of their mandate is inflation, and we have a humongous, on the 15th, May 15th, CPI, Consumer Price Index, coming out. So that's the April CPI. Now we know that January and February were a little hotter than expected, and we're like, oh, it's wonky, it's seasonal stuff, it's pricing data from the first of the year. It's January and February are always kind of weird when it comes to data and reporting. Let's look at March. Boom, March came out, confirmed the first quarter
had some higher inflation on the CPI print. And that's what got the Fed Chair Jerome Powell to come out last week and basically say, yeah, we've stalled out on our progress, but we're still confident that they're going to cut and we are not going to raise. In fact, on May 1st, they started quantitative easing. Now, not exactly. I'll explain it. So when they cut their balance sheet runoff from 60 billion down to 25 billion, they are buying treasuries. So they are buying treasuries. So it's less tightening, which is a form of easing, but they are actually buying as of June 1st, actually at the end of May, they're going to start buying treasuries. Now let's talk about treasuries. $125 billion in 3 5s and 30-year, I believe it's 3 10s and 30-year bonds this week. So the third part of the mandate that no one ever talks about is price stability for inflation, maximum employment, but then also they want reasonable long-term interest rates as far as their maturities of their 30-year bonds and their long bonds. The 30-year bond auction today of $25 billion actually went well. So if you don't listen to me, I'm just some dude, some talking head on LinkedIn, and there's a lot of people that, like they see things negatively or positively or for us. Look at the bond market. What are the smartest people on Wall Street thinking? Look at treasuries. Watch the 2-year, watch the 10-year, see what those yields do. And just in a week, they've come down. They've come down quite a lot. Since April, we had our March CPI print that came out. I think it was like April 9th, I believe, or maybe it was 19th. I can't remember the 9th, excuse me. That CPI print was high, and then we've seen the 10-year run up from there. And now we're seeing it come back down in just a week. So let's take a look at that. We had some great innovation here today. We talked about AI. I made a little comment that some companies out there like to say they have AI, but they really just have away individuals, aka offshoring. You can steal that and use that. But we talked about true AI today. We talked about it quite a bit. It was very interesting to talk about all the innovation in our industry. So please take a look at the Mortgage Innovator Conference. Take a look at the sponsors that showed up. There is brilliant artificial intelligence that is actionable and getting ROI today. So do you and your customer base, your business, your team, do it a favor and take a look at that. And by the way, I saw some pretty interesting quotes about AI. It takes a lot of power to fund all that. We had a power outage here at 12:48 a.m., which was a sign that I needed to go home from the bar, and I did. And it came back on 6 hours later. But did you know that a Google search consumes as much power as powering a 100-watt light bulb for like 6 seconds? A ChatGPT session is 50 to 100 times more power consumption. So you think about power consumption and how important it's going to play a role in AI, in all the data centers, and all the chips, and all the building of what's going on. Henry Druckenmiller is a world famous, Stanley Druckenmiller is a world famous investor, and he had a comment about AI being overhyped in the short term, but underhyped in the long term. So that's a good sign. It's not too late to invest in innovation in your company, in AI, start learning it, because we all know long-term AI is going to dominate a lot of stuff in our lives. And by the way, there was one quote that I saw from the OpenAI CEO. He said that the fear of misinformation from AI has been largely wrong, but there's still time. So we have a lot of corporate responsibility as we adopt AI into all of our businesses. All right, let's go check it out over here. One last little run. See what you missed here. The last great innovation and tech show of the year. And sun's going down. We got a DJ. Hopefully they haven't taken the food away from me yet. And we'll go rock this place for a little bit. There we go. Hey, there's Jordan from the NBA. Hey, good to see you. We're live on Lease. Let's go. All right, everyone. Have a great week. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.